This is market review for the day of October 9. So today we had a continuation basically from Tuesday's rally. Now it completed the market maker buy model, attacked equal highs and displaced furthermore. So far it seems like we're heading for the external range liquidity, which is essentially September 26th high at 20,538. Intraday speaking, it was not an easy day in my opinion. Let me clear this because the order flow was initially, it lacked energy in my opinion. Basically displacement was lacking displacement, but let's clean this. But let's take a look at the 1 minute order flow. So I'm going to keep the market maker buy model, equal highs, original consolidation high, with a green trend line, just so you guys can distinguish that level. And I'm dropping down to the 1 minute here. Alright, so here's the 1 minute look. Let me just zoom out a little bit so you guys can see it for the New York session. New York open here, close here. It was a trending day, then consolidation before the FMC minutes, then it kept going higher. We had a continuation from the morning session. So let's take a look at the open first. So during pre-market, or during London session rather, we had this rally to the upside, and the market started pulling back here, which was essentially range equilibrium. So it pulled back during pre-market before equity open and sent it higher. This is basically one setup for life or the second stage reaccumulation completion at, let me see the time, at the time of almost New York open. So by the time New York opened, which is this candle right here, it displaced after taking out the second leg target, which indicates second leg has failed. Now you expect either a reversal or a pullback. So this is the displacement. It left equal highs though. That's a key thing, because when you see that, it's usually a fake move to the downside in this case, or a pullback rather. So at 9:30, he retested the CB and dumped very aggressively, took out the minor sell side. And from there it popped all the way up to the open range gap high, and also this CB. This is also BPR. You can consider that as BPR, which is even better technically speaking, because it's building up more buy side liquidity now. We have 1, 2, 3 equally highs. So from open range gap high, it dropped aggressively one more time, and the reason being it left equal lows before that rally. So it came all the way down to clear that. Now we have equal lows here, equal highs there. It rated the equal lows first, and from there, as expected, it repriced higher above the equal highs. Now the rest of the PA, this looks kind of choppy, but the silver bullet retest here at 10:01 precisely was the only good entry apparently. Because this was too much wick, bull flag, fake out, and the rally. I think it's tradable, but you have to have a big stop loss. So the silver bullet retested the 10 a.m. fair value gap and repriced all the way up to the equal highs. So the key thing here is from equal highs, so market is building up sell side, or buy side rather, and building up sell side here. Whichever runs first, it's gonna reprice or reverse higher to the other side. So the first runner will be turtle soup. So it turtle soup the low, went for the equal highs, silver bullet fair value gap, using the silver bullet fair value gap and the first fair value gap of the New York session. Now the rest here, it was a rather slow grind up all the way to the market maker buy model original consolidation high on the higher time frame. It cleared it, but it was wicking too much and lacking displacement. I didn't like it. So it cleared the high, pulled back 3 drives here, and along the way, let's clear the charts a little bit. While pulling back here, we had one sell side sweep or attack, second one, and the third one here. 3 drives, bullish 3 drives into the order block. So the order block is 10:21 a.m. candle, and its mean threshold. Looks like an SMT divergence there. Let me check. Yes, might be an SMT. Okay, yeah, that's a bullish SMT also. Let me annotate that as well. And it trades down into the order block mean threshold, and the order block open price is the very next candle essentially. It retests it and sends it higher, takes out the short-term buy side. Says plus OB. 3 drives with a bullish SMT and sends it. This was the first energetic move of the session, in my opinion. Anything before that was lacking this. So it popped, formed several BCs here. The latest one obviously is the valid one, or not valid. I don't like to use that term, but if it's really bullish, it's not going to trade down into the lower fair value gaps, right? It's going to use the upper portion of the latest and sends it higher. So it does so here. It trades down into the BC upper portion, can't even reach to 25%, and then it slowly grinds higher and goes for buy side here. This level, this slow grind, first of all, in my opinion, if you don't feel it here, it's not tradable. And because it's a slow grind, it also makes the position management very hard. You can't be, and if you, and obviously you're seeing it like this during the live price action, you do not consider a potential slow grind here, which means as it moves away from your entry, you might move your stop loss aggressively. If you do so, you might get stopped out. That's my point for slow grinds, because it's, I don't know how to anticipate slow grinds. I can see it after the fact, and not after the fact, but like if I see 1 candle up, 2 candles down, 1 candle up, 2 candles down, I can anticipate it. But as I'm looking at it like this, I personally don't know how to anticipate a slow grind here. If I was seeing it lie like this, you know what I'm saying? So it ended up being a slow grind higher. Along the way though, it left equal lows. So all these lows, this one, and the lowest one, they're all equally low. So I'll keep the lowest one because it's also in discount. So price slowly grind higher. Here it displays up and then displays down. We have a trap here, basically trap longs with equal highs, which means those highs will get cleared once the price is ready. So here it displays slower, left a breakaway gap here, and it's in the market maker style model, essentially going for the equal high, equal lows. And here there's quite volume balances. This candle's wick also, this the CE of that wick. There are volume balances here. Price went all the way up to those volume balances, worked its way around. If you don't see that, there is also inversion fair value gap here. You can use that as well. So it took out short-term buy side and dumped very aggressively. Took out the minor sell side. CB retest. The upper portion retested, and then it dumped one more time, rated the sell side or cleared the equal lows right at 12:20, basically during lunch hour. So before I jump onto this portion of the price, here's what I'm gonna show you guys before I moved on. SMT, reversal area, dealing range. So this is discount. You can also use Monday morning session range. There's nothing wrong with that, but you guys know I like to use from SMTs. So this the fair value gap right below the sell side equal lows is a discount fair value gap, so it drops down, V shape here, first BC along with a V shape, aka PPR. It displaces one more time. There is a breaker block here because that's essentially a failed bearish short block. Breaker block. It comes down to retest that breaker block and delivers buy side several times here. There's 3 drives, bearish 3 drives in this case. And here's the key thing. Market came all the way up to this buy side here, but it failed to engage with it. It reversed. What does that tell you? That tells you something, okay? I want everyone to understand this. If you see this kind of per PA, or when I see this kind of PA, for example, like this, okay? Market failed, the very next candle is a displacement or a large candle here. It formed a bearish SIBI, okay? What this means is this whole rally to the buy side, or short the minor buy side, is a fake move, okay? Market is building up liquidity to run on it later because this ends up as equal highs. So if you see this, any bullish PD area in this price action is not valid. I don't want you guys to consider going long within any of these bullish PD areas, okay? Because that's when you get knocked out. You wait for discount or you wait for sell side engagement and then maybe changing the state of delivery or bearish order flow to bullish order flow, okay? Look, this is basically building up liquidity. Now this is equal highs, which means market will engage with this, okay? Once the order flow turns bullish, first of all, and second of all, it will either retrace all the way down to the discount or it will engage with the sell side. Now here, this is the bearish fair value gap or SIBI. Moves down, we have equal lows here. It clears the equal lows, and then wicks retraces one more time from this latest SIBI. In this case, it doesn't engage with the sell side, but rather it basically reverses at the 50% of this CE of this wick, which means market is getting into bullish order flow right now. One displacement will confirm that, which is right here. Now it's in a bullish structure, and also it formed equal lows here. This low is relatively equal to this low, so I'm going to annotate the sell side as equal lows. Now what we have here is, let's go back. Now what we have here is we have equal highs, we have equal lows, we have equal highs up here, which is the technically the real drawn liquidity, okay? Draw. So equal highs, equal lows, and the real drawn liquidity is bullish, right? If you know the real drawn liquidity is bullish, what you need to do is you understand the market has just built up liquidity on both sides, so you wait for one side to get purged, then you turtle soup that. But if you have the drawn liquidity like this high, so you're bullish, you anticipate, okay, equal highs getting turtle souped, then equal lows getting cleared, then the real move comes, okay? Both of these, the short from the equal highs, turtle soup, there's also fair value gap. You can use that fair value gap for your stop even easier. This short is a trade, okay, as well as this long. okay, is a trade as well. Okay, I'm not saying you should take both of these. What I'm saying is choose one and trade that one and be content. Okay. Personally, what I like to do is if I have a bullish bias already, I would let the sell side delivery go, so that the initial turtle soup from equal highs to reprice all the way down to equal lows, I would let that go, and I would look for long entries near the sell side. Okay, that's personally what I would like to do. So this is very important in my opinion. Like, you guys should understand this. Also, this is a double purge as well. Buy stops first, sell stops second, and then goes for the real draw liquidity. Okay, so this is what happens. This is the bullish structure formation. Comes down to the BC, delivers the turtle soup, pushes one more time into the CB from lunch hour, basically fails there, displaces lower. Right here is a displacement. We also have this order block. Order block got retested, and not retested but delivered, and its mean threshold. And right before FOMC minutes, it clears the sell side. Equal lows got cleared. I actually wanted to see this candle at 1:53. I wanted to see this candle at 2 p.m. sharp, so that the FOMC minutes would have been more easier to trade. Why? Because imagine this was 2 p.m. low. What I would have done was, or would be, any time price drops below the 2 p.m. low, that's a long for me. Okay, but because it happened before 2 p.m., I had to wait for more price action to build in my favor, which it did, but I ended up missing the move because it didn't offer me an entry that in my liking. Okay, so it comes down for the equal lows, rejects it, very large wick, and then inversion fair value gap here. It works it around the inversion fair value gap and eventually pops and goes for the actual drawn liquidity. The rest is irrelevant. I'm not even going to read this because it was the day was completed anyways. There was volatility, and this volatility was due to the fact that ES has to get above these highs as well. Nasdaq just followed that. So FOMC minutes. Okay, I like to do this a lot. 2 p.m. candle opened and closed immediately. The moment it closes the candle, immediately after, annotate its high and low, and then if you're bullish, expect the manipulation below that candle, which is here, and then you can turtle soup that to go bullish. You can target the 2 p.m. high, you can target the minor buy side, either way is fine. And then in this case, it ended up being choppy though, I'm not gonna lie. It ended up being choppy here, which is typical, which is normal, because this move came, the big move came right before 2 p.m. So let me clear this. So the 2 p.m. low got manipulated, market displaced to the upside. Now 2 p.m. high got traded into. It formed this BC here. The BC didn't hold, unfortunately. The moment it inverted it, I lost my interest in this price action. So it worked its way around here with a lot of wicks and stuff. But after all, what it did was it ran on sell stops. It didn't have to, but it did. It ran on sell stops, and immediately after that, we had a very impulsive move, clearing the equal highs and basically completing the market make buy model. Other than that, I don't have anything else to mention here. Oh, actually I do. Whenever market forms wicks like this, or this one, a rather large wicks, always look at its quadrants. Okay, it's going to tell you some it's going to give you information about how weak or strong the price is. So here, as you can see, in Q traded down into the 25% of this wick, okay? And if I look at the S, which was weaker during the afternoon session, it traded all the way down. I mean, it traded more, almost traded down into the middle of it. It didn't, but almost did. And then it sent it higher as well, but it was sloppy. As you can see, like Nasdaq was going one-sided all the way up here. Yes, stalled, consolidated, manipulated, and then rallied. All right. So what else do I want to? I think the most important aspect of this review right now, for me and for you guys, is this price action here. Okay, this here, equal highs, equal lows. That is very, very, very important. That's my favorite setup after all. The reason is it's so easy to turtle soup this kind of setup. Like, you don't second guess it, and if you're wrong, it's gonna tell you immediately anyways. Okay, so that's all I'm gonna say for today, guys. Let me check the daily. Actually, hold on. So we closed above the 50% of the daily wick, which indicates tomorrow, very, very likely, we're gonna have a large range day to the upside, and CPI is also coming out tomorrow, and market will very likely to form a busy here on the daily. So tomorrow and Friday, I would look for continuation to the upside, guys. Tomorrow's objective should be 538, and then maybe closure of this SIBI, which is 695, and we'll see what happens afterwards. We'll see. I don't like to project that much. In terms of probability, the buy side is very, very likely to get purged, and this fair value gap will also very likely to get closed fully. So yeah, we're probably gonna miss out the buy side purge though. I think it's gonna pop right away during CPI, so we're gonna be trading the range inside, the range formation inside 8 a.m. and 9 a.m. and we'll try to get something out of that. So daily level is kind of irrelevant at this point for tomorrow's session. But anyways, that's all I'm gonna say for today, guys. Hope you find this insightful. Have a great rest of the day and stay safe.